Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short Term Trading Live with Oscar. All right, traders, it's the weekend webinar. Weekend webinar for the weekend of September 5th, 2008. It's not September, is it, Mike? I can tell by the look on your face. October 5th, 2008. Oh, we got that one right now, right, Mike? All right, for October 5th, 2008, we have this weekend webinar planned for you. There is a lot going on out there in these markets, traders, as you know, and it doesn't look like it's going to get better anytime soon. Some of the topics I'd like to cover in today's video are the Omni proprietary moving average and how it's acting with the weekly currency charts. I would like to show you how markets will go where destined to go, no matter what type or size of intervention is applied. And there should be some forced margin liquidation starting first off tomorrow, Monday, when many traders just can't hold on to their stocks any longer. Many of them will get phone calls from their brokers. Mr. So-and-so, you cannot afford to be in your stock position. What would you like to do? Should I liquidate? Are you going to send in more money? Many of those answers are, please, sir, liquidate my positions. Then you get the carryover. Please sell out my soybeans, sell out my gold, get rid of my corn, get rid of my beans, get rid of my bills, get rid of whatever I'm holding because I need to pay for my stock portfolio. So it leaks out or bleeds into commodities as well, that forced margin liquidation. So I thought I would just handle that first to let you know, expect that to come your way out of the chute Monday, and then we'll see what's going to happen. All right, traders, we will get to some charts. I will show you a series of charts. Basically, this is what you're in for. Many charts. We showed you in a video on 8508. We told you that the currencies were breaking through the Omni's proprietary moving average on the daily charts, and they were heading down towards the 200 bar moving average. Well, since then, many of these charts, if you zoom out to a weekly, looking at the forest over the trees in these currencies, are all beginning now to break the Omni proprietary moving average on the downside and head towards the 200 bar in the weeklies. This whole big currency move started when we pointed out to you that currencies were breaking down through the Omni proprietary moving average on dailies. Now they're getting through on weeklies. Traders, with that thought in mind, the dollar index opposite started getting above the Omni proprietary moving average on 8.5 or right around there. We showed you that in the video with the other currency charts, and now it itself is above the Omni proprietary moving average on the weeklies. What makes this important is this. Back in September, October, November of last year, 2007, we started showing you what we thought was the top in the S&P and the NASDAQ, and then they got below the Omni proprietary moving average, then they got below the 200 bar moving average, and now you see where we are today. Okay, with that in mind, proof is right there for you. You've seen that happen. If you go back and look at many of my videos, you will see us pointing out the huge head and shoulders that came to bear, that formed in the NASDAQ, many of the indices that we trade, the S&P. We've seen it in the Dow Jones. We've seen it in the transports. We began to point that out to you. They broke the Omni proprietary moving average. Then they broke the 200 bar moving average. And then they started to break them on the weeklies. And then you've seen what happened with the stock market. Same setups now in the charts I'm about to show you in a few moments for currency trading. So very important to keep that in mind. Another few things I'd like to mention to you. Many times you've heard me say in some of my videos that merger mania begins to take place at the bottom of any major stock market debacle or any big bear market. Just like at the top of a big bull market, you get a lot of merger mania. Now, you've heard about all the banks merging and all the mergers that have been plastered out there for us to see. The Morgans, Wachovia, you got all of that going on. Merger mania is happening all over the place, just to name a few. And, of course, you already know about all the major banks that you've heard about. You have a lot of things happening in a lot of areas. You have Microchip Technologies. They are a semiconductor company. They're looking to buy Amtel. Samsung's trying to buy SanDisk. Micron Technologies is looking to buy a German chip maker. I think they're Qmonda. You got Vishay Tech Intertechnologies putting in a hostile bid for International Rectifier, CVS stores, Walgreens trying to buy them. The Dutch bank just took over Fortress. You have a Japanese bank. I believe the name on that one is Norinchukin Bank. They're looking to buy a piece of Credit Agricole. The list goes on and on, traders. And why merger mania begins to happen basically is only the strong survive after a huge move like this. Only the strong survive after a big down move in world markets. And then the strong start eating up all the weak and the weak disappear. Now, usually with the companies that are lower interest rates, which gives these big companies lots of money to go out and buy the ones that are ailing or failing, and merger mania takes place. We are beginning to see merger mania. I am not calling for a bottom. You know how I feel about this market right now. I have been deeply bearish for months and months on end. But when you start to see merger mania, and we did have the bailout package, and I would imagine all of Europe and a lot of Asian countries are going to, including Australia, are going to have their own bailout packages. Maybe, just maybe, at some point we can give this market a little bit of a boost. You're seeing the merger mania. You're hearing about the bailout packages. Now, the next thing that this leads into is lower interest rates. And traders, I've been telling you this in many videos and many of my classes at the Omni Trading Academy, that all of this year we have been lowering our rates here in the United States, trying to absorb some of this terrible news that we've seen coming our way in the banking sector and the real estate, while at the same time, a lot of European countries, or at least ECB, a lot of Europe and a lot of other countries, were raising their rates, forcing our dollar to get pounded and their currencies to rally. And as those rates were being raised, I would stand in front of this camera and get in front of my camera at my live site, and I would tell you, traders, wrong. They should not be raising rates in Europe right now. It's almost a play to beat on the US dollar, and while it was working, hey, to you, hey, congratulations. But however, the game is over, and you've raised rates in Europe, in my opinion, entirely too high in the face of a disaster. And now Europe has no choice but to start lowering their rates. So even if the US lowers their rates, we know that we're almost at the lowest that we're going to go anyway. So dollars are going to remain strong even if the US Fed policy is lowering rates, because we know many other countries of the world are much higher than ours and have to lower their rates. Now, you've seen the turmoil that it took to get our Congress and our senators and the president and the guys running for president. We needed them to get together and come together and say, we agree on a plan, right? We're only one country, and it took us a long time to get it done, and it didn't pass the first one, and finally a week later it did, and it really didn't do much, which brings me, of course, to markets will go where they were destined to go no matter what size of intervention, but we'll get to that. Point here is this. Now you have Belgium, Germany, Ireland, Spain, France, Luxembourg, the Netherlands, Australia, Portugal, Finland, Greece, Slovenia, Cyprus, Malta. All of them have to agree on a package and sign off for this to happen in order for euro rates to come down. Do you think all these countries are going to agree on a package together? We had a tough time getting our country to do it. Imagine getting 15 countries to agree upon something. Right now, you've heard about Ireland. They're saying we're backing the banks, and that's really not good as far as the news we're hearing from Euroland. They don't want to see that happen. Each country is going to do what they need to do or think they need to do to protect their own. How are you going to get 15 countries to agree on a package? This could very well mean the possibility of either the end of the euro or many countries opting out and restarting their own currencies. I am not saying that will happen, but looking at the analysis, watching what happened in our country, and then wondering how you guys are going to do it, I don't know how you're going to get together and get 15 countries with totally different mindsets to come together and agree upon the package and how to go forward. But I hope and wish all of you well. I hope you can do it. Keep in mind, though, there could be the chance that the euro may not function as well as it used to. So that of many of the currencies, but that one in particular, it looks to me like a serious short. All right, traders, with that in mind, I got a lot of charts I want to show you, so get ready. We have a lot of currency charts. We got a couple of charts of indices. I want to show you what's going on these charts now so you can stay in tune with the larger picture, which of course, you know, I think that's what these weekend webinars are for, to keep you in tune with the larger picture. In order to do that, I want to show you some charts now. We'll start with dailies and weeklies, and we will look at what the world looks like as far as currencies are concerned, and then we'll talk again, traders. Let's go to some charts. Okay, traders, I'm going to rip through these charts because there are many, but you need to see what's going on here. Okay, back to a video that we shot on 8508, and we told you about getting short the euro currency and that it would break down. Of course, we did another video around 9.6 to tell you to buy it. And then around 9.25 for viewing on 9.26, we shot another video for you and told you sell signal, here we go downside. Well, the reason why we were sure that we can count on this sort of action was because right here we took out the Omni's proprietary moving average, and that gave us the big sell signal because it didn't only happen in this currency, it happened in tens and tens of currencies, and I showed you many of them back on that video dated 8/5. Point of this chart is this. The big break happens after we get below the Omni proprietary. We get below the 200 bar mover, and then it never stops, right? Well, that's the daily. Let's go look at the weekly now of the euro currency. Look at this, traders. The weekly euro currency December weekly bar done through the Omni proprietary moving average, just like it did in the daily, and then the big crack began. Well, now we're heading towards the 200 bar moving average, and the 200 bar moving average is watched by fund managers all over this planet. You saw what happened when the daily got below the Omni proprietary, started heading towards the 200, it got below that and never looked back. Well, now we're getting that action here in the weeklies, and traders, the weeklies are the large picture. It's the forest from the trees. And if you really look closely, you got a shoulder, head and shoulder building right before the break. Wow. You saw the daily. Here's the weekly. That's one currency, euro currency. Let's go look at the next one. Traders, Swiss franc. Same sort of thing. You got below the Omni proprietary, began to break, got below the 200. Look at the massive monster drop since then. That's the daily, right? Let's go now look at the weekly. Weekly Swiss franc. You get a big break, you test the average, you rally up from it a little bit, and we are now below the Omni proprietary moving average on the weekly Swiss franc. So you've seen it in the euro currency and the Swiss franc. Let's look at more. Canadian dollars, traders. You got below the Omni proprietary. It was one of the first to go. It started to break, ran up and tested it. We did a video and told you to sell it, and look at the break. That's on the daily. The big break started when you began to settle below the Omni proprietary, right? Let's look at the weekly on the Canadian now. Traders, the weekly Canadian dollar. Look at how long this average goes, basically unscathed. Little bit of a dip here, but markets were different when we had that dip. Now you have a totally different landscape in the currencies, and you are well below the Omni proprietary on the Canadian dollar weekly and heading right for the 200 bar. Boom. Now that the weeklies are showing you the same look that the dailies showed us, and you saw the magnitude of the drop on the daily charts, now you got to expect that to begin to happen further now that you're seeing it on the weeklies. Let's look at more here. Check this out. The New Zealand dollar. We're going all over the planet to show you this, baby. The New Zealand dollar breaks the Omni proprietary. The last time it tried, it didn't break it. It held the 200 and the Omni proprietary. Runs up, breaks it here. Big break, gets below the 200 bar, even bigger break. This is a weekly, traders. This is happening on the weekly in New Zealand. We are heading lower in world currencies. Let's look at more. We're not finished yet. Czech Koruna, baby. The Czech Koruna now. I mean, I am talking all over the planet. Look at the Czech Koruna. This is on a daily. This was in that video from 8508. We told you look out for downside. It breaks. It gets below the 200 bar. Breaks further. Rallies. Gets right to the 200 bar and breaks heavily. Now, that's the daily. Let's go look at the weekly on this. Okay, traders, on the weekly, look at this. We're just about to take out the Omni Proprietary. Look at that. On the weekly for the Czech Corona, once it gets below that, it's going to go right to the 200 bar, traders. Do your homework. You will see this for yourselves. The daily started the race. Now we're in the weeklies. But we're not finished. There's more to show you here. Let's look at another one. British pounds. British pounds, December daily bar. British was one of the first ones to go, traders. We gave you the signal in the video 8.5. Gave you another signal to buy it again in 9.6. Then we gave you a video to sell it on 9.25 for viewing 9.26. And that did work on the daily. Why? Because we got below these two averages and we knew we were in for some trouble. That's British pound daily. Let's go look at the weekly. British pound on the weekly gets below the Omni Proprietary, gets below the 200, and look at the spike. Crack. Then a rally and the next spike down. The weeklies, once they get below the Omni Proprietary, they usually really start to move rapidly on the downside. And then once you get below the all-important 200 bar moving average, there is no looking back, traders. You usually will not get below that 200 bar. We're all the way down here now. That's British pound. Let's look at more. Another currency, one of the first to go, is the Australian dollar. Australian dollar breaks the Omni Proprietary on the daily bar, heads down, breaks the 200. Look at the massive break that starts to happen after that. Boom, boom, boom. That is the daily, traders. As you can see, there's a pattern here. Now let's go look at the weekly. Weekly Australian dollar, weekly bar. You break the Omni Proprietary right here and look at the size of these drops. We're talking around 87, 88 when you broke it. We are now 74.90. 74.90 in Australian dollar. First it breaks through the Omni Proprietary. That gives us the big sell signal. Hits the 200, fails to hold that, and away we go on the downside. Traders, these charts just keep on going. You will see there's more coming. Okay, traders, you are now looking at December dollar index daily bar. December dollar index. Now, something interesting happened here on the dollar index. This is probably the first time in I don't know how long, the first time this year I can say that I did not take a double top, because you know me, traders, when you see a double top, you sell a double top. However, in the dollar index, we had this top here and this one on Friday or Thursday going into Friday last week. And I mentioned to all of my students, this will be one of the first ones I cannot take unless it rallies up again and tests that top and then breaks. Why would I do that? Because it is always something I will do. I will always take a double top signal and sell it. However, you had a multitude of currencies, foreign currencies, putting in double bottoms at that same moment in time. And if there's so many double bottoms don't usually hold. So I thought with all the weight of those other currencies putting in double bottoms, this would probably not hold and would break through. On top of that, most times I see a double top, indicators are already overbought and starting to head down, right? So then you get a double top, you look at your indicators, and you can absolutely think it's probably a short signal. In this case, technical indicators in the dollar index were not overbought and were not pointing down. So I thought we sit back and do not sell this double top and let it test. Well, what happens, traders? We blow through the double top Friday, and now we're all the way up here Sunday night as of this video. Good thing we do our homework, and good thing we don't just blindly trade rules. You have to make sure that your rules fit around the technical analysis at the moment the situation arises. This particular time, the rule base said you should sell it, but all the indicators told me not to do it, and the multitude of foreign currencies putting in double bottoms, which again, I feel do not hold, as well as double tops. I thought it would break the double bottom, just like I thought that would break the double top. Euro currency and many other currencies did break their double bottoms, and dollar index broke its double top. Now let's go look at the weekly, because don't forget, the daily gave us the signal to get long dollar index. It broke above the Omni Proprietary and exploded, right? Well, let's go take a look at what the weekly looks like. Traders, this is the weekly dollar index. Look at this. It is it's finally above the Omni proprietary moving average and heading right for the 200. Now that the weeklies are below in currencies, foreign currencies, and above in US dollar, basically the writing is on the wall where we're going next. These series of charts tells me that they will be cutting rates in Europe. They may or may not cut rates in the United States. There's a neutral there. However, even if they do cut rates in the United States, we are almost at the low end of rate cutting that could possibly happen. Whereas Europe and many other foreign countries have a lot of room on the downside. That means their currency will go down and the US dollar will go up. The charts absolutely told you that was going to happen first. Fundamentals always come out in the charts first. Now, interestingly enough, there is one currency that's widely traded that seems to be not only immune to this movement, but it's in tandem with US dollars. Let's go look at that. Traders, the Japanese yen weekly bar. It's been above the Omni proprietary. It's been above the 200 bar moving average and enjoying a pretty sizable rally. That is different than you'd expect because you've seen many foreign currencies versus dollars going down while dollars go up. However, the Japanese interest rate is so low at this point, traders aren't stupid. There's nowhere for them to go. They're not lowering rates because there's nowhere for them to lower to. So in essence, this is very inexpensive currency, and that's why it's being purchased, in my opinion. So you do have Japanese yen on the side of dollar index. If there's a currency you might want to buy with dollars versus other currencies, take a look at the yen. Now let's go look at the yen daily chart because there's a very interesting pattern there. This is the Japanese yen daily bar. One top, two tops, always sell double tops, right? In most occasions. Look at the big break you had. But now you have the test a third time. Many times, if you have a third test, you end up going above that and continuing higher. So the daily Japanese yen is telling us higher. The weekly is telling us higher. So keep an eye on the yen versus other foreign currencies and in tandem with the US dollar. Now, traders, I would like to take you into the indice charts because they're very interesting, and let's look at those. All right, traders, I can say this. 1, 2, 3. I'm sure all my video fans know what that's called. That is a head and shoulders formation. This is the very same head and shoulders formation we have been warning all of you about video after video after video since the third quarter of 2007. Traders, here it is for all you fans out there that turned out to be basically bullish during this time and would send me letters stating that I have this wrong. Traders, here you are. Technical analysis is never wrong. Look at the size break that we've had. We're in a parallel channel right now, and look at how far we've gone since we've gotten out of that head and shoulders, traders. Technical analysis always works. Maybe on occasions you'll call technical analysis incorrect, but if you call it correctly, 95% of the time you use technical analysis, you will have the right trade. All right, traders, that's the S&P, and we clearly think that that's going lower. Yes, there can be some rallies, but we clearly expect this to go lower. One of our projections off of this head and shoulders has been about the 1050 area. We have that little line here, show the dotted line showing you our projection. I think we're going to kiss that area very shortly. Now let's go look at the NASDAQ chart. Okay, traders, the very same head and shoulders appears in the NASDAQ chart. We have been showing this to you in so many videos. I think you must eat, drink, and sleep head and shoulders formations by now. But it is our job to keep you in tune with the larger picture. And here it is. Shoulder, head, shoulder, and look at the eventual crack that came from that head and shoulders formation. And I do not think it is done. Our projections are for lower. We should easily trade the 1430 area before it begins to find support, and then maybe even lower from there. But a lot of this started, traders, when we got below the Omni proprietary and the 200. That's when the big breaks began to occur. I've just shown you that in many foreign currencies. You see the size break that happened after the S&P and NASDAQ went below those averages and put in a head and shoulders. Many of your currencies put in head and shoulders before they broke, like the dollar index put in an inverted head and shoulders before it rallied. Here is what happens after that takes place, traders. Get ready for it in currencies. It's coming your way. Let's look at another chart here. Okay, traders, for many of you who follow my classes and come to the Omni Trading Academy, you have seen me show you these apexes and how I feel about the way they work. The false breakout, and you traders, you know what I'm talking about now. That false breakout took place right here, and then look what happened when you got the 75% mark of that formation. When we got to the 75% mark of that apex, look at the size break that actually happened. False breakout first, then the big drop. Important here is we are now well below the 200 bar moving average. We are all the way down here. We are well below the 200 bar moving average now, traders. This is getting serious. Let's look at more charts here. Okay, traders, that last chart was the Dow Jones Transportation Average Daily Bar chart, right? Well, it gets way more serious when the weekly bars begin to get below those averages. The weekly bar clearly below the Omni Proprietary Moving Average on the Dow Jones Transportation. Now look, the 200 bar all-important moving average tapped it earlier in the year, went back up and failed, and now look, we are all the way down here. Here's the average, here's where we are. Even if we had a recovery, you'd probably only recover back to the average and then back down again. Traders, do your own homework. Remember, the big break took place in indices once we started to get below these two key averages, and now that's what you are seeing in world currencies versus US dollars. Do your own homework, traders. Make sure you agree with these directional calls before you consider trading. Well, I gotta wind up for this. So, traders, you've seen those charts, right? There were a lot of charts there, and a lot of them are pointing in only one direction. Down in foreign currencies and up in US dollars, and the only other savior I seen was the Japanese yen. Traders, again, just to remind you, when we started telling you about the head and shoulders and the big break that we expected coming in the indice markets, S&P, Dow Jones, transports, you name it, that was basically because A, there was a formation, and B, it started to get below the Omni Proprietary and then the 200 bar. And since then, we have been in bear mode. Well, now your currencies are doing that, and the dollar is getting above it, and that means you're going to get a lot of that to continue on, at least according to what you've seen in history. History showed us in this S&P move this year that it would happen, and it did. So now we look back at history and look at those currency charts and realize, boy, oh boy, this is likely going to happen again. Do your homework on that and see what you think about it. All right, traders, I mentioned that markets are destined, or will go where they're destined to go no matter what sort of intervention. I learned that all through the 80s and early 90s, watching many central banks, especially the BOJ, Bank of Japan, and our U.S. Fed, intervene in currencies, and they would spend billions of dollars of intervention. It wouldn't last sometimes a day. Sometimes you'd get 2 days on a big, massive concerted intervention. You'd get a week, and then they would continue to falter. That happened all throughout the late 80s and early 90s. Any of you traders who have been around long enough to have witnessed that, you've seen it for yourselves. You know intervention doesn't work. Now, again, the size of the intervention package that we're using, the whole world has to do one of those in each one of their countries, and then time needs to pass. That money that's going to start being used to buy bad debt and shore up banks, it doesn't show up right away in the economy, traders. Think of it simply like this. Drop a boulder in the middle of a quiet, pristine lake. It creates a big wake, and that wake starts to move towards the shoreline. It could take hours before it actually reaches the shoreline. Well, now if we take that and put that into an economic picture, if you do something to fix the economy, it has rippling effects. It takes a long time for that wake to finally show up in the economy. So a market will go where it was destined to go no matter what the intervention is, because the intervention will take place down the road, even though it happened today. The effects of it take place down the road. That's why you've seen, or that's why you did see last week, even though they passed the bailout package in the U.S., they hammered our markets anyway. That's where they were going. Use your technical analysis. Don't try to figure out what's going on in the world. Don't try to figure out fundamentals, because they come out right in the charts, traders. Use your charts. Use your analysis. If you don't know how to view charts in order to figure out what the world news is just by looking through the charts, Come on down to www.livewithoscar.com. Jump into our trading rooms. I am on live camera and microphone as often as I can be, and I try to be there every moment, every evening, every day. You know, I am human. I can't be there 24/7, but I am on camera, live, and microphone in those chat rooms, helping you learn how to get those charts right and get the analysis right. So come on down to the site, grab a free membership, and join us, traders. Don't trade alone. That's what Don't Trade Alone is all about. Come into the chat rooms where there are hundreds of us Omniacs huddling together, doing our homework, doing our analysis, and trying to get this right. One of the things I can do for you out there, traders, this is a tough place to be right now. If you are a trader, it is like being in a dark cave. We can be your flashlight, traders. If you are in a dark hole or in a dark cave right now and you need a flashlight and a map to get out of trouble, you come on down to our site and we will be that map and that flashlight for you. So come on down. All right, traders, give me a call anytime, day or night, 702-629-4755. And as always, continue to send me your emails. Shoot out your emails to oscar@futuresanalysts.com. Okay, traders, I hope these videos are helping to keep you in tune with the markets, with what should be coming next, what's happened in the past, and how to apply it going forward. Absolutely, the history in the charts does point out what should happen next. You just need to know how to read that properly. Okay, traders, all the best to you this week. Make sure you come down to the site. Make sure you huddle with us and say this to yourselves every morning, every afternoon, and every evening, because it'll help you keep your emotions out of trading, and you know what that is. Subs are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.